Hello to all traders and welcome back to another market review brought to you by Orbex. So it's all about the gold market as we enter the last few days of the trading week. We saw a slight pullback on the yellow metal in yesterday's session. Bond yields are rising and some profit taking has seen gold just pull back from its recent peak just above the 2760 area, just below the 2760 area. So we're just seeing now that possibly this $10 to $20 move has kind of subsided slightly. We've moved over halfway at the moment. So are we gearing up for another record high? Well, a lot of analysts and economists are expecting the 2800 naturally to be the next target. You know, it is a very big psychological level, but we did say a long time ago that 2900 possibly by the end of this year will be reached, and then 3000 as we go into next year. So with Middle Eastern tensions rising, these are not going away anytime soon. We've also got the prospect of a shaky dollar as we head into the last couple of weeks up until the US presidential elections, not long to go at all. So lots to kind of take into account on fundamentals really driving the markets at the moment. So on the 4-hour chart, like I said, we're just seeing now that after this meteoric rise that gold has been seeing, wave after wave of upside potential, this particular rally here was just very like a phenomenon. You know, it was very, we went from 25 just roughly about 2600, and we moved over $150 to the upside. So very significant move in that short space of time as well, only a couple of weeks. So obviously fundamentals really driving the gold market. But you know, as I said, we've had this slight dip since then, and we're just waiting to see now if price action will completely rebound towards this area here, roughly about 2755, 2760, and then start moving even higher. This will be quite significant in the near term. The dollar market, on the other hand, is still pushing higher as well, even though the gold market was rising quite significantly. So dollar, if you've been looking at its main competitors in the FX market, has really started to see more of a bullish stance on the dollar. The euro, the yen, the pound, it's all been quite a reverse from the dollar in the last few weeks. Will that keep on going? Well, we are expected to see a slight pullback, but we've seen pullbacks before on the dollar, but not really too significant. We're having one at the moment. However, we could see more of a slide possibly towards the 103 handle. However, if we do get just a slight sell-off, then we could easily have another move to the upside. So, you know, just pull the chart back. You know, we haven't seen these particular levels since August, and then before that, we're just looking at June's high above 106. So just a couple of dollars away, not too much out of the ordinary here. We're looking on, you know, the RSI, the MACDs, if there's any slight divergences. As you can see here, very overbought for most of the last couple of weeks. So we are expecting possibly a slide downwards. If that does happen, then expect this bearish divergence to come into play, and then we can see possibly a move lower for the dollar. But as I said, with the run up to the presidential elections going to happen now, we'll see what happens. How it's very close, too close to call at the moment, but that's what they said about Trump's victory against Hillary Clinton 8 years ago. So will there be another 4 years for Donald Trump, or will it be more of the same from a Democratic point of view with higher taxes going into the next 4 years? Obviously, we'll keep you updated with all the latest in fundamentals and technicals as they come, all the breaking news on our Telegram and YouTube channel. So stick with us, stay ahead, trade responsibly, and we'll speak again next time. Bye for now.